Tony. I'm the Senior Manager of Education Initiatives here at the Economic Club. And this evening, we thank you for joining us for our Mentor Monday, which is focused on careers in finance and banking. And this is an industry informational, which is where we try to expose our scholars and alum to a different field that they may be interested in or just want to learn more about. And thankfully, given our network at the Economic Club, we're able to pull some great leaders from different industries, and we have an awesome conversation scheduled for today. We thank you all for joining this evening. Again, we have a great group of not only scholars, but alumni, emerging leaders, and of course, our members who are all committed to continuing to support our Economic Club scholars during this time. So to get us started, without any further ado, I'm going to introduce our moderator in quite just a second, but just also wanted to give everyone a sort of overview of how the Mentor Mondays go in case this is your first time. I think a lot of you familiar faces and sort of know how this flows, but we'll kick it off with an opening discussion with our panel, and then we'll have a little bit of time for some Q&A with the larger group. But then for the last 25 minutes or so, we'll have smaller breakout rooms where you guys can have opportunities to further network and discuss. In each room will be one of our panelists, as well as other leaders that are adjacent to or in the banking and finance field who can provide their feedback or thoughts as well. And just opportunities to connect and network. I mean, whether or not you're in the finance or banking field or not, you can always come to these opportunities and learn as well for information for your own professional development, as well as connect with new people that you may not have done before. And so we hope you enjoy this hour and take advantage of the opportunity to connect with new people, as well as deepen connections with others that you've had the opportunity to meet before. So I want to start out by introducing our wonderful alumni moderator. Her name is Amber Dickens, and she is a recipient of the David and Rubenstein Economic Club Scholarship from the year 2015, from the class of 2015, when she graduated from Friendship Collegiate Academy in Washington, D.C. After graduating from high school, she attended the University of North Carolina at Greensboro and majored in business administration. She graduated in 2019, and after graduation, she participated in the Economic Club's internship program with Urban Alliance, where she interned at United Bank. After her summer internship, she was able to be hired full-time as an assistant manager and retail banker, and has continued to work there since October 2019. She's also participated in the Virginia Banking Association Management Development Program, and she has ran track in college and high school. And so she's not only a scholar, but an athlete, and now a young professional working in banking and finance. So we're excited to have her lead this discussion, and she will introduce our panelists as well. So Amber, off to you.
Thank you, Melissa. I appreciate your introduction. Let's see. Hello, welcome everybody. Today I'll be introducing Chris and George. And Chris Hartman is a senior vice president with City National Bank based in DC. He joined the bank in 2018 to open the new regional center and develop and manages high net worth and ultra high net worth relationships with leveraging a team approach. Begins together specialists in investing, insurance, financial planning, credit, and banking, and trust and real estate planning strategies. Mr. Hartman has over 24 years of comprehensive private banking and wealth management experience. Prior to joining City National, he served as an advisor and in various leadership capabilities with SunTrust Private Wealth Management. Before SunTrust, he focused on ultra high net worth segments as a director of City Private Bank. He also served in numerous consumer and commercial roles at Bank of America and predecessors National Bank. Mr. Hartman earned 2 undergrad degrees from the University of Virginia and his master's degree from George Mason University. He coaches youth sports and serves on the board of various Alexandria, Virginia organizations. George Swygert. George Swygert is a senior vice president and private client advisor in the McLean, Virginia office of Bank of America Private Bank. George works with high and ultra high net worth individuals, family, and select non for profit um, ins- institutions to design, develop, and implement customized strategies. George joined Bank of America Private Bank from Capital One, where he was region executive overseeing Mid-Atlantic region. Prior to Capital One, he held regional president Wells Fargo and Wichova. He graduated from the University of North Carolina in Charlotte with a Bachelor of Science in Finance and Bachelor of Arts in Marketing. He currently serves on the board of McLean Project of Arts and the foundation of the University of North Carolina, Charlotte. He is a member of Economic Club and serves as a mentor for Economic Scholars Program. He previously served as the chairman of the Maryland Bankers Association, treasurer of Phillips Collection, and held various board positions within Latheran Social Services, the Fisher School, and Junior Achievement of National Capital Area. He resides in McLean, Virginia, with his wife and daughter. So thank you all for joining the panel today.
Thanks for having me.
Okay, so the first question we have today is basically we are dealing with the pandemic and a lot of events that has happened. So we first want to start off with how was your bank's response to COVID?
I'll hit that first. I think, first of all, I'll sort of give credit for the whole industry. I wouldn't just take Bank of America, but I think the industry as a whole has pivoted pretty quickly in response to COVID. What's interesting in banking, one of the major trends that have happened in the last 3 years is people moving to electronic. In fact, I bet you many people on this call, I have an 18-year-old and I had to show her how to physically write a check for the very first time last month. She never had to do one. I bet most of you don't even keep a checkbook, right? You use your phones. What has happened in the last year since COVID in our industry, this is coming from the American Bankers Association, the speed at which we were moving to electronic transfer has tripled. And banks have seen transactions that walk into the financial centers drop by almost 85%. Now, part of that, branches were closed for a while, but I think a lot of those things, you're starting to see people migrate to becoming more digital. Also, I think it's put a lot of onus upon banks to be particularly helpful during this time period, whether it's loan forgiveness. In our institution alone, we have 3.5 million mortgages right now where clients aren't making payments and we purposely have allowed them to pause making payments until their income can come back up. So I think the industry's responded in a lot of unique ways. One of the biggest things, and I think, Chris, your bank participated in this too, was the PPP loan, the major loan program that was put on by the U.S. government to support small businesses throughout the country. And we're just started taking applications a couple of weeks ago for the second phase of that program. So in our case, we have almost 8,000 people working full time on that project.
Mm. Thanks.
Yeah, we so listen, when the pandemic first hit, well, first of all, I got to tell a funny story because you talked about your 18-year-old with a check. My son, who's a sophomore in high school, picks up the phone, calls our favorite local restaurant that unfortunately went out of business yesterday because of COVID. But this weekend wanted to place our last order, called them. They were so busy that the line was busy. He holds up his phone, playing that busy tone, and had no idea what it was because he had never heard a busy signal before on a phone. But so yeah, things are changing. But anyways, so when COVID first hit, I mean, for us, the immediate conversation was mostly around the economy and the investment markets because the crisis was such a surprise and appeared to be so dramatic that many people who follow the markets know that the market just completely fell down, and so there were a lot of very anxious clients on the individual side that were just worried about the state of the economy and the investment markets in particular. That was kind of the first immediate phase of putting out the fires when COVID first hit. To George's point, though, we got very actively involved in small business lending, and we actually had to build a platform overnight because traditionally we're not small business lenders. My bank is not, but we thought it was going to be very important to a lot of our clients who were business owners. So we actually stood up. We didn't have 8,000 people decked against that space. We actually stood up an infrastructure practically overnight in order to do that. And it ended up being, tremendously important to our client. We're a relatively small bank, certainly with respect to Bank of America anyways. I think we did 14 or 15,000 of these loans, and somewhere on the order of $4 or $5 billion worth. And these loans were designed to provide. It was called Payroll Protection Program, or Payroll Protection Plan, but it was designed to provide some very near-term, nearly interest-free, effectively government-guaranteed money to businesses in order to maintain their payrolls, so unemployment wouldn't just completely shoot through the roof and stay there. So that was, the better part of the next 3 months of the segment within COVID. And, things started to settle in a little bit after that. Everybody's still quite a bit nervous, but now you're starting to see the longer term effects of COVID playing out. Lots of businesses under significant stress, lots of individuals under significant stress. As George mentioned, lots of loan payments that need to be forgiven or loans that need to be restructured in order for us to try to help these businesses stay afloat as long as possible and keep the economy going.
Mm-hmm. Yes, the PPP loan and COVID was definitely a busy time in the bank. I was fairly new to the bank, so it was definitely something new. But I feel like a lot of people are prepared this way, and a lot of people are better prepared for this time when it comes around. So I would also like to ask you all, how has the bank responded to current events that's going on, such as the invasion of the Capitol, as far as inauguration, and as far as social issues such as Black Lives Matter as well?
Yeah, well, we're definitely doing our part to keep the plywood industry in business. They unboarded our building for the, I think, 7th time in the last several weeks. So it's been since the summer. So it's been a really challenging time for the city. Our bank is, for a bank anyways, I'd say kind of abnormally vocal and involved in our communities. And we're not particularly afraid to take a stand on certain issues. So, we did a lot during COVID, both financially, but also, from a community involvement standpoint. The summertime and around social justice issues and the George Floyd incident and whatnot, we came out very publicly, in support of equity and have, contributed both time and voice and capital, for that matter, to a lot of those causes. More recently, what we've seen in the last couple of weeks here in DC, there hasn't been a lot that you can actually do about that other than just kind of voice your support for our democratic institutions and our American way of life, which we've done. But aside from just lending a voice to the cause, we haven't done anything in particular lately. I guess in that regard, COVID is a good thing because there aren't a whole lot of people working downtown, or nearly as many as before, so there are less people in harm's way. But our company's been very supportive about just supporting associates and colleagues throughout this entire last year.
Yeah, and I'll take on what we did. We did a $10 billion contribution to the foundation, Bank of America's foundation, to support minority-owned businesses around the country. And in addition to that, to fund some initiatives, for example, a $10 million contribution to the Smithsonian African American Museum in efforts for education. We also required all of our executive management team to go through diversity awareness training, those that haven't completed it. It was kind of interesting being a white male, a man of privilege. We were put in small groups if we had to do it through Zoom, but throughout our entire company right after the George Floyd incident. And it was interesting for us to have very candid conversations with each other about how others' lives have been impacted. Sometimes living in McLean, Virginia, I don't have a real understanding, and I didn't until I really started having some of these conversations. And I think we've encouraged that a lot in our organization. It's uncomfortable at first, I think, for some people, but I've seen a lot more. Just being aware is probably what I would say has been kind of enlightening. We've also kind of spoke with a pocketbook. Bank of America does make political contributions. We made a statement 2 weeks ago, particularly after the incident that happened at our Capitol, which was disheartening, regardless of your party, that we would make no financial contribution to any senator that did not ratify the votes, because we felt like that was just a way you take actions, but you also have to have your pocketbook back it. And so those are a couple of things that we've done as an organization. Brian Moynihan, our CEO, has been very public about that, very vocal about how we're going to position our company in the future to be a thought leader in this in our country, and not just someone who sits and follows around.
But thank you all for your answers. I am glad to hear that both banks are deciding to take action and starting to move towards being involved
in the name. But they didn't have a quick connect either. So
I had someone call for.
Okay. My next question is, well, basically, with you all know the financial gap as far as let's see, you all know financial gaps as far as the different ethnicity groups and everything. And I did notice Bank of America, they do have a website called Better Money Habits. So that was definitely something that I looked into, and it definitely helping to help young youth such as ourselves learn more about finance. I do want to ask Chris, do you all have any financial literacy programs in order to help young people like ourselves?
Yeah, we do, and we also, very active. Our colleagues are very active in their respective communities, and that's one of the primary ways that we try to give back and interact within our individual communities across the U.S. That's an area that, for whatever reason, is just not an area of focus or interest as much anymore as it used to be. And I don't know, maybe it's because, we all used to have checkbooks and you actually needed to balance them in order to know how much money was in your account. But the awareness around just the basic financial tools and concepts when it comes to personal finance, let alone some of these more complicated financial areas, is really striking. So we think that's really, really important, and we look for as many opportunities as we can to support that in our communities. But we do have some information online as well, but it's one of those subjects I think is much better in an interactive setting when you can talk about real life examples of things as opposed to just reading about it. But reading about it's certainly better than nothing.
And I'll echo what Chris said about, the work that has to be done around it and how things are different. Being young, I was at one time, and I know many of you on this call are. When you think about retirement, that's something that's like so far away. Or you think about, planning for the future when maybe, you got to make the rent payment, which is a lot if you live in Washington, D.C. area, or you got to make the car lease or the car payment, and you got to pay for groceries. Like, kind of saving for that, which is going to happen 40 years from now, is not really kind of in everybody's mind. And even if it is, it may not be within your financial grasp to do that. But what the most important thing that I think as an industry and as we as leaders need to do is help teach that kind of discipline has to start at the very, very beginning. I'll tell a true story. I've got a client that I'm dealing with, and they're in their mid 80s. One was an accountant and one was a school teacher, husband and wife. Never inherited money, never had super high paying jobs. He was a low level accountant in the government. She was a public school teacher. Probably together, they might have made 60,000 at the most, which that's a lot of money. I'm not discounting it, but when they retire, that was probably what they're making. They've accumulated about $5.5 million. That's why they're a client of mine now, by saving $5 a week, $10 a month, and doing it and just putting it in the market, not picking fancy stocks like Tesla or Amazon when it was $1. They didn't. It just slow and steady, a little bit every week, a little bit every month. They never took big fancy trips. They drive an old car. They still live in the same house they bought in the 60s. They probably could have spent a little money along the way. But, if you think about long-term goals and long-term savings, it's a little at a time. And that's how they always say, how do you eat an elephant? There's one bite at a time. And it's the same thing with retirement. And I think it's interesting when we're dealing with financial literacy and financial training, and people just don't understand, like when you're 21, 22, putting $1,000 away in a 2-year period is the same as a 55-year-old lady who's about to retire putting $20,000 away for the next 5 years. That's the same equivalent. That's the compound impact of money. And it's I think we have to do a good job in our industry. When I was running banks, I would always teach financial literacy to all of our tellers and bankers, and because they always say you start at home first, because once you learn it, then you get the energy and the excitement, then you can teach others. That's why I think it's really neat that you guys have some of that opportunity, because you're part of this program.
Well, thank you. Okay, the next questions, they're a little more personal. So I do want to ask you all, what were you always interested in finance and banking? And what is one thing you wish you all knew before entering the field?
You want to take that one first, George, or you want me to?
So, was I always interested in banking? No. So my first job in high school, I plugged zoysia grass. So what that basically means is when you're in South Carolina, it's 100 degrees. You go out and you work in a field and you put little pieces of grass and you take them and plant them in people's yards. I worked for a nurseryman, and I think my father did that. So I would go to college, because otherwise, if you don't go to college, you do labor work, right? So obviously I was going to college. There was no doubt about that. And when I was in school, the bank offered an internship. And I'm like, oh my gosh, working as a teller in the summer in air conditioning. I didn't care that I had to wear a jacket and a tie. The fact it was air conditioning, when I'd worked in the field for 2 summers in high school, I said, this is my kind of job. So I did it for all 3 years, and 3 years I was in college, 4 years, and I got offered a management job, a lot like yourself. You're going through a management training program. As soon as I got out of school, I said, this is great. Banking's boring. Bankers are boring. There's nothing exciting about being a banker, and they're all the same, and they just die in the job. The bank that I worked in, all the tellers have been there 35 years. One of them had been there 40. So this is what they did their whole lives. And so my goal was to go work in a bank and do it for a year or two to save enough money to go to law school. It's now been 35 years. I've yet to go to law school. I kept getting promoted, so I was making too much money to quit, and I married a lawyer instead. What I tell you is the reason why I stayed, banking was changing at such an incredible speed. When I was coming out of college, that's when ATMs were coming. Banks were acquiring other banks. My bank in North Carolina bought 11 banks in my first 4 years. So as the company was growing, they didn't have leaders. So I became a branch manager at 22, a regional president at 24, a regional executive at 25, and executive vice president at 28. That's because there wasn't enough people. So I just happened to be in a growth industry. And that's what really kind of kept me in it. And it wasn't that I planned to have a career in banking.
Yeah, I never plugged zoysia, but we share a commonality in that I didn't envision myself in banking. I mean, when I was growing up, I fancied myself that type just because, but for the not necessarily the right reasons. Saw some cool movies about Wall Street and knew they made a lot of money, and so I was like, that's cool. Sure, I'd like to be a banking or finance guy, but not particularly for the right reasons. But I wouldn't have imagined having a career in banking and finance, let alone for as long as I have, when I was in high school and college, because for me, the subject, and I got a buddy here on the call who I've already told this story to, the subject matter that you think is the most critical for being successful in banking and finance, my brain didn't do well with that. I was not particularly strong when it came to book-wise, when it came to economics or math and things like that. So I wouldn't have in a million years have thought I would have ever been offered a job in banking or finance. But like Amber, like George, I was presented with an opportunity to join a management training program at Bank of America's predecessor, Nations Bank, down in Richmond, Virginia. And I thought, well, if I'm ever going to get into banking and finance, this is probably it. Otherwise, they're going to figure out who I really am, and they're never going to offer me another job. And I thought a management training program would be a great way to start, because it's, you're getting a very large, successful organization to professionally train you. You're being trained across a variety of different areas. And at the time, I wasn't entirely sure what I wanted to do still. And so I thought having as much breadth as possible was important. And so I thought that management training program was a great fit. And, I spent a little bit of time in the consumer system, was fortunate enough to have a mentor of sorts who thought I'd be better off to the firm somewhere else. And that presented me with an opportunity in a different line of business in the bank, brought me up to Washington, accelerated through roles there, again, changed lines of business and so on and so forth. And, here we are 25 something years later, and I don't see myself going anywhere. So I'm as surprised about this as anybody, but I'm also thrilled. It's worked out fabulously well for me. So better to be lucky than good sometimes.
Right. And I know you spoke on as far as different areas of the bank. Usually before I entered banking, I only thought about banking as the teller and the manager and the assistant manager. Of course, that's what a lot of people think. So can you go more into depth of the other areas you experienced inside the bank, and which one?
Yeah, you say? Yeah, this is incredibly important for anybody, because banks are large, intricate organizations with major lines of business. The legs of the stool. Every bank has them, but there are so many other pieces to banks that it's hard not to find a fit. You might need to spend a little bit of time looking for it or thinking about it. But banks even of our size. Bank of America is significantly larger than we are. We're owned by the Royal Bank of Canada, which is a $1.5 trillion bank. George, what's B of A now?
Right at that number. Yeah.
Yeah. So we're, but the bank I work for, which is a subsidiary of RBC, is only a $75 billion bank. And even there, it's like every time you turn around, you're learning about a new part of the bank. But generally speaking, the legs of the stool are your consumer bank, those branches that you go to, dealing with individuals on a consumer basis, dealing with small businesses, and sometimes dealing with a market that's called, let's just call it the mass affluent, wealthier than your average individual, but not private bank kind of wealthy. That's one channel, the consumer channel. The second channel is a commercial channel. This is a channel that deals with operating businesses, companies, but up to a certain size. Once you get to that size, you transition over to the corporate bank. The corporate bank deals with really, really large companies and also deals with Wall Street types of things, doing IPOs, taking companies public, raising debt, raising equity, things along those lines. That's what a corporate bank does. And then you typically have a wealth management group as the last leg of the stool. And that wealth management group, there's a lot of different flavors to it. George and I are both in that space right now, but that deals with affluent individuals or ultra affluent individuals and institutions in that environment. Think of like not-for-profits or foundations and endowments and things along those lines. So to simplify things, those are kind of the four primary lines of business you're going to find in any bank. And then there's 1,000 iterations and pockets around that. And it reminds me of a conversation I had with one of your colleagues last week. And this young woman is passionate about social work and passionate about counseling and making her community better. And we got to talking about banking and finance. And I said, well, I mean, banks are heavily regulated entities. Banks are very actively involved in their communities. Large banks have massive infrastructures in place to support their community efforts. They have, George mentioned the foundation at Bank of America. That's one example. Compliance with the Community Reinvestment Act, that's another. There's all kinds of ways that someone who's passionate about social work can actually fit in very nicely at a bank, and you wouldn't think about that. So it's just an anecdote for folks to realize that, just because I do X doesn't mean just because I study X doesn't mean I have to do X.
Yeah, and I would also add, we're also one of the largest users of technology. So most financial institutions have huge technology platforms and incredible technology divisions. So my last position, I actually was Scrum Master certified. I actually managed a technology pod developing new apps for the firm. And so banking industry is one of the biggest hirers of new technology talent. So you have a lot of people working for the institution who never worked in a bank, and if only their idea of banking is using an ATM machine.
Right. And as far as I know, you all expressed the different areas of banking, but as far as you all personally working in different areas, which one would you say was the best area to work in, or professional development?
I'll take that one. It was interesting. Right out of college, I was working for a little tiny bank. It was called First Union. First Union later became Wells. But when you're in the management training program, you kind of get exposed, and you may have done this in your training. You get exposed to all the different areas of the bank, and they ask you, which one do you want to pursue? Well, if you're really smart and good looking, you go into wealth banking. If basically you find out which one you want to do. And my mentor, because you get signed a mentor in the management training program, was actually the president of our company, believe it or not. And so I got my best suit on. I went to go see Mr. Crutchfield, and I said, I've got offers in the commercial bank, offers in the private bank, offers in the retail bank, trying to figure out which one I want to go to start my career. And he looked at me, he said, I'm going to give you 2 pieces of advice. I have followed this always. He said, 1, what's the most broken? Number 2, where do you think you'll have the most fun? He said, because ultimately, that's where the biggest reward will come, financially and professionally. So I've spent most of my career in retail. It's where I have the most fun, and it's usually where, it's the most exciting at the time, most things moving. So I don't know if there's a right area to pick that's the best for your career. I think what you've got to figure out is, if you're in a large institution, or if you're in an industry like banking that covers so many different things, as Chris very eloquently pointed out a while ago, I think you got to find something that kind of strikes your passion and that has opportunity. And I think when you do that, that's when success kind of comes.
Thank you for your answer. Okay, and now I believe it's time to break into the 2 rooms. So we're going to have both of you all break off in 2 rooms, and we're going to split the alumni up and see if they have any questions of their own.
Yeah, thank you, Amber. And thank you again, George and Chris. I do want to see if anybody had any questions that could be answered in the large group before we broke out really quickly. If you had a question, feel free to type it in the chat box or raise your hand.
Yeah, I got a question.
Okay.
I got a question for Mr. George. What was your major when you came to college, and what college did you go to?
I'm a graduate of the University of North Carolina, Charlotte. I was a business major because I didn't know what I wanted to do.
Okay, thank you.
And I worked for them in the summertime in the bank. Because I didn't want to work in the field.
Good option.
Yeah, it was.
Great question. Thanks, Brandon. And you guys will have time to ask more questions of our panelists. As Amber mentioned, we'll have 3 breakout rooms actually, and each of them will be in a room, as well as we have some awesome members and emerging leaders on the call. Chris Northrup is an emerging leader and he's at United Bank. Lynette Kelly is a member and she actually used to run the Municipal Securities Rulemaking Board. I don't know if I said that acronym correctly, but it's definitely aligned with the banking industry as well. And then we also have Pam Rothenberg, who is a lawyer who does a lot of great deals and has to work with banks, I'm sure, too, in her work. And so all of those folks can provide you some great perspectives. We also have some great alum. And so in a couple minutes, we will transition to those rooms for about, I will say 20 minutes or so. And then we'll come back at the end just to say goodbye. But when you get into the rooms, make sure you introduce yourselves and just share, for scholars, share where you're studying, what you're studying. And if you have any more questions, of course, our members and emerging leaders, please share your work as well as for our alum. And if you can, please turn on your cameras to make it as interactive as possible. So thank you again, and we'll see you in about 20 minutes. Yes, no. Awesome. Well, before we leave, I just wanted to give a great thank you, a major thank you to Amber Dickens, our alumni moderator, as well as our panelists who shared some wonderful wisdom, George Swygert and Chris Hartman. I want to thank you guys for taking the time to not only be here this evening, but just preparing to be here and sharing with our scholars and with each other. We hope that you guys, everyone basically found this time valuable and had time and opportunity to connect with new people. Just wanted to make sure everyone was aware of what was coming up. We do have a few more Mentor Mondays coming up. Our next one on February 8th will be focused on Black history, and we're excited to have some great leaders to share their experiences and context of everything that's going on, as well as the occasion of Black History Month. And then February 22nd is actually a great day because it is the last day of our internship program application, which is open. So all scholars who are eligible, that means you're completing or have completed your sophomore year of college, please apply to the program to learn more about the program. But it also will be a great day to do some mock interviews because you will have to do an interview to be a part of this program. So mock interviews are a great practice for anyone, whether you're applying for the internship or a job or whatever you're trying to do in life. Always have opportunities to practice your interview skills is really key. And then on March 15th, we will reprise our speed mentoring, which is always a fun event. We did this once in the fall, and we want to do it again in March. It'll be a great opportunity to find some more connections. And as I mentioned before, the application for that internship program is open until February 22nd. And our scholarship application, all of you are already scholars, but if you know someone who is a high school senior in DC, please let them know our scholarship application is closing very soon on January 31st. So we hope to have as many people to consider for the 2021 class of Economic Club Scholars. So again, thank you everyone for being a part of this event. Thank you for participating, and we hope to see you again soon. Have a great rest of your evening.
Thank you.